Hi there, welcome to Kneppy Invest and welcome to 3 stocks or companies on the ASX that release interesting or intriguing Appendix 4Cs for the June quarter 2025. I am recording this video on the 5th of August, intending to release it towards the end of September. Okay, so the 3 companies I'll be looking at in today's video include one company I've never had a look at before, another company I've only looked at briefly once in the past or maybe twice, and another company I actually own some shares in. And those 3 companies are Spenda, the one I've never looked at before, N1 Holdings. I might have looked at this company once, briefly in the past, and also Kaiser Reef, the company I do have some shares in right now. It's in my super, so I am not trading this. And there is a reason I took a position in this company. In fact, one of the reasons I took a position in this company is because I looked at Kaiser Reef after a recommendation from you. Now, you did not one of you did not recommend me buy some shares. They just said, hey, have a look at this company, and I liked what I saw. Okay, so what I'll do in today's video is I'll go through briefly what these companies do. For Kaiser Reef, that's fairly simple. And then we'll have a look at the Appendix 4C or 5B for Kaiser Reef. And then we'll have a look at the cash receipts history and then the chart. Okay, so first company I want to look at is Spenda. No idea what this company does. But they do say they sell better and get paid faster. I'm assuming they mean their customers. A simple integrated business payment solution. Oh, how many companies are like this on the ASX? A payment solution company that streamlines processes and makes it easier to send quotes and invoices, manage order disputes, and collect payments. Okay, so I'm just looking at the products. Fair bit of software here. Software for accounts receivable, accounts payable, full software suite, payments, B2B payments, invoicing, e-invoicing, B2C payments, virtual credit facility, payments methods and options, and also some integrations. If you have a look at their about, they should have a nice little story here maybe. We're transforming the way businesses trade and get paid. There we go. They did a leadership team. And I was hoping there'd be some sort of history here, but there doesn't look like there is. Okay, so that's Spenda. Now, this company it's not really small. It has a market cap of 32.3 million, but it does have 4.62 billion shares on issue, which means the share price is below 1 cent. So immediately that is a red flag for me. So if we have a look at the trading today, there could be a fair bit of trading in this company. Yeah, share price is up 14% just because it's gone up 1 pip. That's it, 1 pip. 1.5 million shares traded today. So it is a little bit of trading, but not a lot. If you look at the trade history, some days, a lot of trading. In fact, almost 40 million shares traded on the 29th of July, which is probably the day they released their Appendix 4C. So maybe a little bit of interest in this company on that particular day. Okay, so let's have a look at Spenda and their Appendix 4C and why I've included this company in this particular video. And usually there is only one reason behind that. And usually it's because the company is operating cash flow positive. So let's see if that is true for Spenda. Okay, so let's have a look at Spenda's section 1 of their Appendix 4C. Receipts to customers 3.7 million, and they were indeed operating cash flow positive by $1.6 million. Now that was helped with other, and there's no details provided for other. What could that be? What could that be? It could be manipulation of our financials to make us look better. I have no idea because there's no details provided. Anyway, so they were operating cash flow positive, even if you take away that other by $1.6 million. I would like to know what that is. But for the year, they were actually operating cash flow negative by $1.9 million. Now, in saying that, I just noticed here that interest paid for the quarter was only $77,000, but for the year was $1.3 million. So either they paid all their debt back or a lot of their debt back, or they did some refinancing, and that has really helped their financial situation in this past quarter. So a pretty good quarter for Spenda. I'd just like to know what other is. They did note to support item 1.8. Oh, there it is. I apologize, Spenda. You did provide some information. Monies relate to restricted cash merchant funds received paid for the quarter. And it looks like that's just a one-off. There you go. I have no idea what that means. Now, they do a fair bit of spending when it comes to intellectual property. So that is a bit of a red flag. So even though they were operating cash flow positive for the quarter by 1.6 million, if you take away the intellectual property And they did spend a fair bit in this particular quarter based off the year. So there could be a bit of one-offness in there. But if you just take that away, they were not free cash flow positive, not only for the quarter, but also for the year. So they're still burning through a bit of cash. Net cash flows from loans to other entities. Don't know what that is. Anyway, 21E. Oh, they do have a note in regards to 21E, the intellectual property. So the company received an R&D rebate during the second quarter, totaling 1.6 million. As disclosed in Note 14, the company's financial 24 annual report, all eligible development expenditure is capitalized in the company's balance sheet under intangible assets, which include software assets that are a form of intellectual property. Yes, that's what I've been saying. When you look at intellectual property, a lot of that is capitalized research and development. So they sort of mentioned that. Looks like they've increased their loans or their borrowings by a fair bit in the quarter. It's gone up about $2 million. So let's have a look at the cash on hand. Plenty of cash on hand, and I would suppose a little bit of debt. Only $3 million of debt. There you go. So not a lot. I thought that might have been a little bit higher. Okay, so let's have a look at some of their commentary. Talking about cash receipts up 114%. That's a fair bit of an increase in cash receipts from last year. So 11.5 million up from 5.38 million. Operating costs down 39%. So receipts up, but operating costs down. That is something to like. In fact, it's gone down from 9.2 million. So they were spending like crazy in financial year 24, down to 5.64 million. A record quarterly cash quarter. Payment volumes 135 million. Cash of 3.69 million. And that's about it for that. A little bit of commentary here if you really want to read it. They've got a nice graph about in regards to payment volumes and financial position. Cash receipts. So this is cash receipts. So just because, I was going to say just because I do it doesn't mean other companies can't do it. But yeah, there is a reason why I do track cash receipts. And we have seen a few companies show very similar graphs where they also track cash receipts. And they got also included an arrow telling us that it's upward trending, which might be quite obvious. So let's have a look at the cash receipts history, my cash receipts history for Spenda. I don't know if this company has changed its name because I don't really remember looking at Spenda in the past. So I'm wondering if this company has changed their name. It wouldn't be surprising if they have. Nothing mentioned on market index. So let's just have a look at some announcements. And what we'll do is we'll go back a few years. I'm just going to see if they've changed their T code recently. Still seeing a lot of SPXs. Still seeing lots of SPXs. Oh, don't see any more SPXs. Serolto. This company used to be called Serolto. That name is familiar. I don't know why, but this name is familiar, Serolto. So they used to be called this. CRO. Yeah, that is familiar. Okay, there you go. So I might have looked at this company well into the past, long time ago, and then they changed the name from Serolto to Spenda because Spenda is spending money. I have no idea why companies change their name. Anyway, let's have a look at the cash receipts history for Spenda. And I'll be honest with you. So this goes back to when they were called Serolto, and back then, nothing much happening. But we have seen an acceleration in cash receipts. Definitely seen acceleration in cash receipts. 2 really good quarters out of the last 3. Now, a little bit pullback in the March quarter, but record quarter again. And I do like this trend. So maybe a company to put on my watch list, even though I don't like where the share price is. Okay, so that's Spenda. Interesting. Now let's have a look at the chart for this particular interesting company who released an intriguing Appendix 4C. Spenda, SPX. And daily chart is a big M for me, which is probably not a surprise. With the share price below 1 cent, you're not going to see many good charts of these sort of companies. The charts more than likely are going to look crap, if anything else, and the share price is near an all-time low. Let's go have a look at the weekly chart. There's a bit of interest in this company back in 2021. Share price got to a high of 21 cents. There you go. So sometimes you can see just because share price has been roaring higher doesn't mean it's going to stay high. In fact, if you bought at the peak in 2021, you've lost most of your money because the share price has dropped from 21 cents to 0.7 cents. Yes, that's Spenda. So not much interest in me just by looking at the chart. But the Appendix 4C is not that bad. So maybe one to put on your watch list. Okay, now on to N1 Holdings. I'm definitely have had a very brief look at this company in the past. Small company, Australia trusted private lender and private credit fund manager. I would have said, yeah, this is a lending company. So there you go, a lending company, a fairly small lending company, private lending, mortgage management, trustee services, fund management. So maybe a little bit more than that. A little bit more than that. A fairly small company. So Spenda had a market cap of, what was it, $30 million. N1 Holdings, 10 million, if that. 9.69 million. Shares on issue, 88.06 million. So you can just see share price 11 cents, which is much higher than Spenda, which was 0.7 cents. But N1 Holdings share valuation is much lower than Spenda. So it has to do with their shares on issue, which is very important. Only 88 million shares on issue for N1 Holdings. Okay, so let's have a look at this company's Appendix 4C. So this company must have been operating cash flow positive. Illiquidly traded, I'm assuming, no trading today. If we have a look at the summary, whoa, geez. There is no one wanting to buy this company right now, and only 4 sellers at 11 cents and 11.5 cents. If you have a look at the trade history, oh, this is no. This is absolute no. In fact, there was no trading in this company in April nor May. If you had some shares in this company, you had to wait 2.5 months to sell your shares, and there's a chance you didn't sell your shares. So illiquidly traded, one of the more illiquidly traded companies on the ASX, it looks like. In fact, they've got the whole trade history and not much. So anyway, so that's massive red flag when it comes to N1 Holdings. You definitely want to see, in my opinion, want to see the liquidity of this company improving. Even myself, sometimes liquidity doesn't matter for me, but this does. This does matter to me. Okay, but that does not mean I should not take a closer look at this company, because even though liquidity might matter to me, maybe you could find something to like in this company and hold it for the long term. Maybe. So let's have a look at their Appendix 4C. Okay. And we already know that more than likely this company was operating cash flow positive, because there's probably no other reason why I would have even looked at this company. So receipts 5.9 million, indeed operating cash flow positive 4.1 million. Now, in saying that, they were actually negative for the year, but a lot going on when we look at section 1. So you can see interest fairly high, so they have a fair bit of debt, which is understandable because they're lending. So it means they have to borrow money unless they get deposits, but I don't think they get that. So they would have a fair bit of debt, but they also net cash from commercial lending, which sort of almost cancels out their interest. There you go. So $4 billion of operating cash flow for the quarter. By the way, that net cash from commercial lending was a one-off. So they only received that in the quarter. For the year, nothing. So keep that in mind as well. This was a one-off. But still, they would have been, if you take that away, they still would have been operating cash flow positive for the quarter. I would say they've pared back a bit of spending, maybe just a little bit, and cash receipts have gone up. Yeah, definitely cash receipts have gone up. If you look at the last 9 months, only about $10 million. Now it's 5.9 million. So a little bit of peak in cash receipts for the quarter. Have a look at sections 2 and 3. I would suppose there's a bit in 3. Oh, no, there's nothing in 3. $11.3 million of cash, but they would have a fair bit of debt. Or they don't have any debt. Even though they're paying interest, they have no debt here, listed here. So something's going on there. Something is going on there. They definitely have debt. So maybe companies don't have to always include their debt in financing facilities. Maybe. I have no idea. That could be a new one for me. Could be a new one for me. Anyway, okay, so let's have a look at some of their commentary. Net profit for the year. So this company is profitable, $855,000, EBITDA of $1.2 million, revenue for the year $19.7 million, increasing 7.7%. Cash receipts $5.9 million, correlated to the timing of interest payments received from customers. They also have an SME lending business. Maybe that's the whole business or lending business. Okay, cash inflow $4.1 million and cash balance of $11.3 million. I just really want to know. Here we go. $34 million of balance sheet capital raised from private debt. $196 million under various debt facilities. and approximately 24 million from one lending fund. Okay, so I always assumed that in a company's Appendix 4C or 5B, a company needs to list their debt in Section 7. So according to this, no. According to this, no. So they just mentioned how much debt they do have. So they do have a fair bit of debt, which is understandable because we saw that interest. Okay, let's have a look at this company's, cash receipts history, right next to Spenda, by the way. And yeah, I suppose cash receipts are climbing over time. A little bit of lumpiness in there, but this company's experiencing growth ever since 2021. Before that, nothing much happening and nice growth in N1 Holdings. So nothing to really, I suppose, complain about here. And what about the chart? This chart is going to look not very good because of liquidity reasons. So let's have a look at the daily chart first of all. One of the problems with Trading View is when there's not much trading, they don't break it up. So if we actually compare the Trading View charts to ComSec, you'll notice a significant difference. In fact, all I've got here is moving averages because, in fact, we'll go back 1 year. You just can't see anything. In fact, we'll go back 3 years. Yeah, you just see very little trading in this company. All I really have over the past 6 months is just some moving averages. And that's one of the problems because ComSec doesn't eliminate any days where there's no trading, but TradingView does that. TradingView just eliminates any days where there's no trading, so you don't get any gaps. So they eliminate any gaps. And that's why you see a full chart here. But if you have a look at the timeline down the bottom, you can see there's not much different distance between 2024 and 2025. So very little trading when it comes to this company. There was a bit of trading in 2022. So liquidity has really dried up in the last few years. But just like I look at this chart, even it's actually in a downtrend. Share price did get to 32 cents in 2022, by the way. So there was actually a fair bit of interest in this company back then. Okay, so that's N1 Holdings. Now on to Kaiser Reef, ticker KAU. A little bit of a bigger company than N1 Holdings. $100 million? Maybe 90. $97.94 million. Okay, so Kaiser Reef. They are a gold producer, high-grade Australian gold producer and explorer. Now, not that long ago, I had no interest in this company because I had this project, I forget where it was it Victoria? Which wasn't really doing anything. In fact, I can tell you exactly. So, A1 gold mine, not really doing anything. And then they bought the Henty gold mine from Catalyst Metals. And this was, in my opinion, a transformative acquisition for Kaiser Reef. It turned them from a company that wasn't really going anywhere in terms of generating any cash flow to a company that could be generating cash flow and should be generating cash flow in the future. So a possible transformative acquisition from Kaiser Reef, but the market really hasn't taken notice to it. And I thought maybe the market would take notice to this company's Appendix 5B, but it hasn't, which has been a little bit of a surprise because I thought this was a really good quarter result for Kaiser Reef. So we'll have a look at the chart in a second. You just notice by ComSec's charts, nothing's really happened. So let's have a look at this Appendix 5B. Okay, so they made this acquisition, everything's going fine. And the other thing I should mention is I don't think these numbers are 3 months of the Henty mine in production for Kaiser Reef. I'm pretty sure it's not. I think it's a little bit less than that. Yeah, Henty gold mine and Tasmanian exploration tenements acquired on the 15th of May. Yeah, so that's not the full quarter. This is half a quarter of Henty gold mine under the leadership of Kaiser Reef. Anyway, so let's have a look at this company's Appendix 5B, which is almost exactly the same as the Appendix 4C. If we can find it, there it is. Okay, so receipts, 25.2 million, a significant increase on the previous quarters. Not only that, the company was operating cash flow positive by $10.1 million. And straight away, you can see this company's acquisition of Henty Mine has been transformational because the company was operating cash flow negative under the old, before this acquisition. And in fact, they were operating cash flow negative by about $4.3 million for the rest of the year. So $10.1 million of operating cash flow in the quarter, and was not a full quarter. That's the other thing to get a little bit excited about. Now, they also spent $21.7 million in investments. I'm pretty sure that's to do with the acquisition. So that's a one-off. That's not an ongoing cost. It's a one-off. Other non-current assets, capital development, 3.1 million. So if you take away some of those ongoing costs, the company was still generating a fair bit of cash flow. So we're talking about maybe $7 million of cash flow in half a quarter. So yeah, I liked it. I thought it was good. And in fact, I thought maybe the market would take a little bit more notice. 25 million, no. They raised a fair bit of capital, so $20.9 million. So they do have a fair bit of cash on hand. So $24.7 million of cash on hand as well. And a little bit of debt. So we're talking about $11.8 million of debt. So not a lot of debt. Yeah, I thought this was a pretty good quarter, but the market did not react at all. Now I'm going to show you the cash receipts history. Now, I wasn't going to include it in this particular video because they made an acquisition, but you'll be able to see, if I can find it here, there it is. This is company's cash receipts history. So this was that A1 mine or whatever it was called, not really doing anything. Then all of a sudden receipts up. And yes, so a significant increase in receipts for the quarter compared to previous quarters. Now to the chart for Kaiser Reef. I thought maybe the market will become aware of this company, but nothing. Share price still going sideways. Now, another reason I got into Kaiser Reef, apart from one of your comments, we did see a bit of an increase in volume from March, and that volume has remained relatively high compared to what we saw before March. So I do like that. And there is a chance that what we're just seeing right now is old shareholders getting out. Maybe they didn't like the acquisition. Don't know why. So the old shareholders getting out, new shareholders coming in, and maybe just cleaning up the registry before the share price can take off. And we have seen, I have read that sometimes volume precedes price action. So this could be an instance where we're seeing that increase in volume, and then we're going to see the price action following on. Maybe they need another quarter. Maybe the market wants another quarter from Kaiser Reef. Okay, so that is all I have for this particular look at 3 interesting Appendix 4Cs and 5A for the June quarter. Spenda, ticker code SPX, N1 Holdings, ticker code N1H, and Kaiser Reef, ticker code KAU. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.